All right, welcome to Falcon Forward. My name's Peter. I'm here with our president, Mike Tangy. We're here for another episode of our podcast. So this has kind of become a weekly occurrence throughout the year. It's July already, which I can't believe. We had our quarterly meeting this morning with our team. We're tracking up and to the right, which is always good. And we've got some great people just moving along. So long 4th of July holiday. We're all ready to get back to it. So Mike, you have a very ornate background. It looks like gold around that frame, but
Yeah,
it's a very cool photo you got. So I like your background today.
thank you. Yes, borrowing it from a conference room, so hopefully I don't get kicked out halfway through our recording today, but we should be good.
That would be one for the books if it happened. So anyways, all right. So today we have two questions, and again, we've been pretty busy just getting stuff done with clients, but two things we wanted to answer. So we have our sixth academy group is going through, and just a remarkable group of athletes actually that I get to talk to every week right now, 4 of them. And their last week that they went through, they learned about the oil and gas industry. And part of their assignments for the week is to come up with 3 questions that they don't have answers to from the material and see how it works. So I answer half of those questions generally on my other podcast, which is Local Energy. This one was kind of less oil and gas related from Michaela Hall, which was, can investments be insured? And I got the question, looked at it with her, and my first thought was, no, you can't insure against an investment. Then the other part of me was saying, well, you kind of can, because there's different ways to, like in different investments, right, that are technically, you could think of it as insurance. What I was kind of struggling with was, you have this speculative risk versus pure risk. So the idea is that pure risk is there's only 2 outcomes, right? You suffer a loss, things stay exactly the same. So either, you get into an accident or you don't. Your house burns down or it doesn't. Then there's speculative risk, which is that you can have a loss, things stay the same, or you can actually have a gain, right? So insurance is never intended to have you, gain something. And so there's other things like the law of large numbers, moral hazard, and then indemnity that are involved. But that was kind of the big overarching piece. Brought it up to you as a question, and you said, hey, I might have a different spin on this or a different opinion. So I wanted to throw it back to you, and then in our article that we write, we can kind of give maybe both sides a little bit more heavily.
Yeah, excellent. So, if the question is, can you insure against investments? So, again, like any good insurance answer, it's kind of say it depends. So, to go to a traditional insurer, like the ones that we would work with that insure your home, your auto, your umbrella, your business, those carriers wouldn't necessarily offer insurance against your investment portfolio for exactly the reasons that you noted, the pure risk versus speculative risk on it. With that said, I think though you absolutely could insure investments. And again, that's kind of what we saw. The best example of how that could potentially go wrong was in the financial crisis, so 2008, when it was AIG not understanding the risks that they were taking on, or possibly understanding and not caring with the amount of money that they were getting paid to issue these credit default swaps. But either way you look at it, the end result was when the investments that AIG was insuring against started to plummet in value, and specifically these mortgage bonds that were bundled together and the ratings agencies gave these AAA ratings on, when those started to lose value and banks that had owned these now had to mark down the valuations that they had on it, or worse, tried to sell them, AIG had effectively promised that if these things went south in value, that they would make the people holding these swaps whole. And, if that would have happened, AIG, I think at the time was facing $180 billion, which, like when we're talking Elon Musk trillionaire, and then this was 18 years ago, the numbers almost seem quaint. But at the time, and it still is a lot of money, it threatened to basically derail the whole global financial system just because of all the dicing and slicing and exposure that other companies had on AIG. And it exposed, a massive weakness in what the U.S. had purported to be the greatest financial system in the world. So that's why the government stepped in. It was extremely unpopular, but it did bring stability to the markets. And then eventually with the government, which had taken ownership in AIG, which was quite unprecedented, was eventually made whole and then some on it. But so again, very technical, very, I'm not sure if it's the most exciting stuff in the world. If someone actually is, I'd love to get your comments or engage further on it. But, again, to go back, that answer depends. You absolutely could insure against investments. It's obviously a tricky investment to make in someone that you got to be pretty sophisticated on because, some of the allegedly smartest people in the room almost caused a complete global financial meltdown by getting involved with it.
Personally, I find this topic fascinating compared to some others that we've talked about. So I think it's to each their own. And like The Big Short's one of my favorite movies. I think I've
Yeah,
watched it.
brilliant.
I can't even tell you. It's one of those movies I'll just put on in the background. And probably because I love Steve Carell so much, but truth is like poetry, and most people hate poetry. There's all these like cool little quips and stuff in it. It's awesome. And then the book I read in college was All the Devils Are Here. And so I've spent too much time looking at the '08 crisis, which happened right when I graduated high school. So,
Yeah.
anyways,
No, the
good.
author, the Michael Lewis is the author, and I mean, absolutely
Yeah,
brilliant author. And how
yeah.
actually reading one of his books now for
Are
the
you
second
okay?
time on the pandemic. And he's just,
Interesting. I might have to check that one
hi-
out.
yeah, his way of capturing what happened, even though some of the details of it,
Mhm.
he's immensely talented author.
Totally. And I think he wrote Moneyball and a bunch of other good ones too,
Yep.
right? So
Yep.
yeah,
The
another
Fifth
great movie.
Risk was
So
another
okay.
great one that he wrote. That and some of the stuff you're like, man, you get it confused. And he's recapping historical events, or but some of the stuff that he wrote about specifically related to American politics, or some of the warnings that he had on things. It's just like, man, how does he comes across some interesting people and does a very good job of telling their story.
Yeah, that would be a fun. I think if I was not a insurance broker, I would probably talk to people and write for a living, but I don't know if that pays the bills anymore. So, anyways, we'll move on to something perhaps more interesting and more insurancy, if we can use that word, which is that we have some claims that we're working through as it happens sometimes. And I don't know how to frame this, Mike, but maybe there's a difference of opinion between what the carriers think and what an insurance broker does. So maybe walk us through this a little bit more and maybe set it up a little bit better than I have here.
Yeah, sure. So, we sell something that hopefully clients never ever have to use. But if they do, they're depending on the policy to respond really as they intended. And there's some times when your clients will have an unrealistic expectation of what should be covered. Like or they'll want coverage for something that you've talked about with them and they don't have that coverage, or they don't have any. Like I was reading, there's an article in the paper about specifically on wildfire claims that happened with the 2025 Pacific Palisades and Altadena fires, and they talked about a lady whose policy had been canceled. She hadn't got replacement coverage and her home burnt down. And so in the article, it said how she filed a claim anyway with her old insurance company. And, you kind of read that and you're like, well, that doesn't seem like it makes any sense. But then you also just picture from this lady's perspective of, I mean, she's devastated. Like she doesn't have insurance. She doesn't, and it's obviously too late, but she just, is desperate. So she filed a claim with a carrier, that she didn't even have. But I guess my point with all that is when a person has a claim, now is the opportunity for the insurance company to step up and then for us as brokers to step in. A lot of stuff's pretty easy. You ding up your car and you got coverage on the car, you take it, you get an estimate, it gets repaired, you pay your deductible. Like those kind of claims we don't necessarily get involved with, and they move along, 99% of the time they'll go along great. Liability claims, again, if it's pretty clear cut and dry of what's going on, then it's just a matter of, is every other party reasonable in what they're looking for, and communicative, and, again, things should go along pretty smoothly. But occasionally, and this probably happens to me twice a year, maybe, where that a carrier doesn't do what, in my opinion, they should be doing. And there's been a couple of these in my 20-some year career that it could have been very bad. It could have reinforced, in my client's opinion, that, or what a lot of people's stereotype is about insurance, is that it's a racket. Insurance companies don't want to pay. But in these handful of instances, we've come out of it looking very good because we were able to get the carriers to pay after an initial denial. And, in those clients' eyes, we were the greatest people ever because they did something that, they thought wasn't going to go their way. It reinforced, it broke the reinforcement that they had, or the stereotype they had in their mind of, man, this is a system rigged against me, where we were able to, understand their situation, understand their business, and hold these adjusters accountable and insurance companies accountable when they weren't doing what they should have been doing. So So it's definitely a time as a broker that can kind of make or break the relationship with that client. If you do a good job, you're going to have a client for life. If you don't do a good job, you're probably going to not keep that client past its next renewal, on it. So again, for us, it's kind of showtime. Up to that point, we've been customer service, sales, but this is where we really get to put on our insurance experts hats and guide our clients through what is not a fun process. So.
Totally. Absolutely. So what are some, I mean, do you have any examples of things that we can, that we look at, like as maybe you've come across a couple ideas, but anything specific maybe?
Yeah. So unfortunately, dealing with something here now where we have a client that had a claim come in, somewhat suspect in my opinion of the claim itself, but the carrier still has the responsibility to defend our client because again, they can't control a frivolous claim coming in against them. They need good defense. That's why they bought the insurance. So in this particular case, without going into all the details about it, but essentially, we filed the claim and then the adjuster kind of gave it this, hey, we're not going to cover this claim. And it kind of was not, it was a slow response. So the first things that we do is say, okay, and we'll have a conversation with them on the phone and figure out, hey, what's going on here? Why aren't you covering this? And get a little bit more detail from them. But the biggest thing we'll do is say, oh, please put it in writing. Because up till that point, there's nothing really, and especially over the phone, rarely will you get someone, because we don't know why they're not covering, why they say they're not going to cover the claim. And every state's a little bit different, but most states will say that by a certain period of time, you have to give a formal denial letter and cite why on the policy you're not covering, what are the circumstances of the claim. And that does a couple things. One, it shows that the carrier is doing their work, right? They're not just sitting there deny, and not looking into it. So the first step is, okay, carrier, you say you're not going to cover this claim. I need you to put that in writing. And then once you have that in writing, now you have your okay, let's roll up our sleeves and get to work. And it's looking at the provisions of the policy that they're citing for it. It's reading the rest of the policy to see, are there other areas that we think they could find coverage? So just because they deny under one area doesn't mean that other areas of the policy or policies that they carry could apply. So it's looking for those things. And then it's also looking at their summation of why they're denying it. Like, does that match the actual circumstances? Or are they either omitting facts or missing facts or misconstruing facts on it? So that's kind of step one, is get that letter. Then it's getting together with your client and saying, hey, here's the game plan of what we're going to do. Here's where I think they're wrong. Here's what my plan is to respond to it, which is in writing to respond to their letter and point out the areas that we disagree with them on, and letting the client know that, this is, we're not charging you for this. This is effectively where we get to prove our worth to you. We also let them know though that, because we want to be realistic on stuff. We don't want to say, hey, so we're never going to tell a client, hey, this is going to be covered. Because we're not the insurance company. We can interpret the policy, but again, we're not the carrier, we're not the adjuster. We can say we disagree with this, but we can't go in there and say, hey, this claim will be covered, because that's just, we don't have that power to do that on it. We'll get the client's buy-in on this, that this is something that's important to them. Some clients are like, this is too small. I don't want to, it reinforces what I don't like about insurance, but I'm not going to go further with this. Or I don't want you to expend it. That's pretty rare. Most of the time they do want you to put up the fight on it, especially because it's not anything additional out of their pocket. Mm-hmm. We also let them know though, at this point, that it may be good, who's an attorney. Do they work with a corporate attorney now? What's that person's familiarity with insurance law? We work closely with attorneys that are specifically on insurance claim denial litigators. And insurance coverage experts. And I mean, there's been multiple times where I've had attorneys copy what I've done, my argument on things. And just because it's coming from someone with a law firm, a letterhead on top, it gets a different level of response. And I'm not naive enough or, arrogant enough to think that's not, it absolutely happens. It's frustrating. I don't like it, but I've seen it multiple times on it. The difference with going right to that, I kind of call that like the nuclear option, is that's going to cost the client money. They're going to have to pay that attorney either an hourly fee, or some of these carriers will work on a combination of hourly fee plus a percentage of whatever they're able to collect. Mm-hmm. And again, those attorneys will typically like to see larger dollar amounts, six-figure type disputes before they'll get involved on something like that. Another alternative to do as well is to get the Department of Insurance involved. That to me is also kind of a nuclear option of sorts, in that it takes a lot of time for the Department of Insurance involved. They're going to ask a lot of the insurance of us as agents, which I'm fine with, but they're going to ask a lot of our clients as well. And if they got to be willing to invest that time. It can also, I guess I haven't had great success in going to the Department of Insurance on it,
Yeah.
because it just involves a level of bureaucracy that, and maybe it'd be great to hear if other people have, but that's not something that I personally have had. I've had much better luck just working directly with an attorney on that. So,
Yeah.
excuse me.
Interesting. Huh. I'm thinking back to my, and I know there's a few other things that we could look at there. As a new broker, I remember the first phone call I got for a claim. I was I was Encinitas Turkey Trot, and a client calls me, had my phone with me, answered it on Thanksgiving morning. They had someone threw a brick through one of their windows, and it was in Solana Beach, so just south of it. And I was like, "Hey, look, finish my. I'm not gonna say I ran, but I'm try to keep up with my family here. By the time I get back to the car, we'll shoot over there." So, someone looked like somebody vandalized the glass, and I just remember thinking, like, I've never had to deal with a claim before. Like, this is like the worst. Like it, and it was kind of this, like, you have to learn as a broker how to go through this stuff. So, I'm like, it's Thanksgiving. Like, who am I supposed to call? So I call up, I call up Matt, and he picks up, and he's like, dude, just this is what you got to do. So I'm over there taking pictures of it, whatever. It's all good. We got it handled. But I remember, just trying to navigate that. It takes. It can sometimes take a team, right? And I'm not saying that, figuring out a glass breakage is a lot different, but in some of these larger cases, you need more people looking at it with you to determine the best way through. So I guess I'm thankful I'm afforded some great people around me to walk me through that, even if it's just a broken window. And I say just a broken window is devastating for them, but get through it pretty quickly. So a lot to learn if you're a new broker coming into it, even just on the claim side. And you won't know how to deal with it until you come across one, and then you want good people around you to help you sort through it.
Yeah, 100%. And if you're newer, the basic thing, and I tell this to every person we're working with, new people in the industry, is, does it make sense to you? Like if you were explaining it to your mom or dad or whomever, like, does it make sense what you're saying? And if it doesn't, then start asking questions and have to be like, hey, I'm sorry, I don't get this. I don't get why you're not covering this claim, or I don't understand why you're doing this. Like, that doesn't make sense to me. Explain it. And if they're right and they are able to explain it to you, and maybe you're looking at the wrong way or something, oh, okay, great. But if it doesn't, it's like, that's, put that in writing, because I want to look more into this. And I want, like your point, talk to some other people, go talk to the underwriter on it. If you're working through a wholesaler, talk to the wholesaler on it, get their opinion. Because again, it's an interpretation, right? There's a contract between the insurance company and your client, and this is a person interpreting it. And if you think they're doing that incorrectly, or if you think, and a lot of times it's not that I necessarily disagree with an adjuster, but if the policy is written in an ambiguous manner, it has to be interpreted for the insured's benefit. They weren't the ones who drew up the policy. It was the insurance companies who drew it up. So if they had the opportunity to write a contract and made it ambiguous, those courts have consistently said that gets decided in your client's benefit. So look for that wording that's ambiguous and make that argument. The worst they can do is say no, which they already have, but you'll find out that a lot of times if they're not correctly saying no, then you'll be able to win these cases. And it's definitely a great feeling when you're able to come through for your client like that.
Totally. Yeah. The point you just made about, the insurance policy is, it's really supposed to be written towards the insured's favor if it's ambiguous. Like, that's a huge piece of this, right? And something that's got to be looked at. So I'm going to take a page out of my 7-year-old son's book and just kind of, I don't know, ask questions, right? Constantly. It's good.
Yeah, exactly. There's no harm in me like, I'm not following what you're talking about right here. So can you explain that to me again on it?
Totally.
And then if they can't do it, just, hey, put it in writing, because then you get to write, hey, here's my reasoning. And then the beauty of that is then you can try and poke holes in that, because they've planted their position on it, which is their job. They're supposed to do that. They have to do that. And if that's inaccurate, then, hey, here's what you said. And then, because we have gotten claims where after we pointed out provision, they were like, well, we didn't really mean that. Well, no. You put that in your letter. You can't change what you're saying on it. And so again, takes a lot of time, can be very frustrating, but to me, it's one of those, becomes the principal piece of they better do this because they made a promise to pay and they're not holding their promise, and I don't like that.
100%. Yeah. And I'll just say, if there's one thing that I've learned is that having kids will teach you how to become a better insurance broker or a better
Yeah.
client advocate,
Why?
because
But why?
I just keep going back and back and back, and it's been a lot of fun. So, man, and a lot of great family things. I'm just gonna throw this out there. So many, like, just looking at so we had our Zoom call today, and it's just so cool to see the growth of the company and like everyone's families and new kids and like all these cool things. Like we did a 2 weeks ago,
Engagements. Yeah.
we did our volunteer event, and just we had like half a dozen kids writing cards out and stuffing bags with goodies for and it was just amazing. So I don't know, those are the cool things. So I don't know, I wanted to bring that up at the beginning of the podcast, but here we are at the end, and so hopefully that was a good the day into that. But anyways, it's been a great couple weeks, and looking forward to the back half of the year now. So
100%.
anyways, with all that said, we'll go ahead and wrap up here. I'll have an article written hopefully in the next couple of days. Love to just really dig myself into grammar edits and kind of just really soak it up for y'all. So I will have that posted and published if you want to go through it or ask ChatGPT to look at it. But anyways, Mike, thank you so much for taking the time. We're at our 20-minute mark, which is kind of our ideal place to land, and we'll do this again next week.
Sounds great. Thanks a lot, Peter.
All right.